What's going on, everybody? Matt Hornaday, and today I want to talk about breaking down your monthly payments. What's all included? What didn't you know that you have to pay for? What are some things that you might be able to remove from your monthly payments? All right, let's get into it. So the first thing is your principal. Now, the principal is the balance of your loan or the mortgage amount that you have on your home that you're going to be paying off, chipping away every single month. The next piece is your interest. Now, the interest, if you're financing, you're going to have interest that you're paying on the home, and you're going to pay that every single month as well. So that's your second line. Now, the next piece is going to be your taxes. Now, your taxes, if you escrow them, meaning that you're actually paying the mortgage company, they're holding it in what is called an escrow account, so a separate account for you to be paid on an annualized basis. This amount is paid every single month as well and goes into that account. Now, there is a way for you to actually remove that, and we'll talk about that in a second, but we're going to move on to the next point. The next point is your insurance. Your homeowner's insurance is extremely important. And if you get a mortgage, it's required. If you don't have a mortgage, you can actually get it removed. And this goes into an escrow account when you're paying it monthly as well. Now, I told you that we would talk about removing a couple of things in a specific situation, and here it is. The two things are your homeowner's insurance and your taxes. Yes, so if you end up putting more than 20% down, you can actually request to get your escrow account removed. You're not going to use the mortgage company to end up paying your homeowner's insurance or your taxes on an annualized basis. You're going to take the ownership on yourself to make those payments every single year. What does that do for you? It reduces your monthly payment to your lender. Does it mean that you don't end up paying your monthly taxes or your monthly insurance? Well, not monthly, you pay it annually. So you have to make sure that you're still saving enough money at the end of the year to pay those premiums, but it's not necessarily included in your monthly payments to the lender. The other item is PMI, which is purchase mortgage insurance, or MI, which is mortgage insurance. Although they have two separate names, they function 100% the same way. Well, let's say 80% the same way, because there's one little change between the two of them. So with your purchase mortgage insurance, or let's just say your mortgage insurance overall, now this gets paid every single month as well. And why do we have this? This is actually to protect the bank. So this is something that you're going to be paying into monthly. Yes, I know, and it sucks. It goes towards something that hopefully you'll never use, because really the banks hold this money in the event that somebody defaults on their mortgage and they're unable to pay their mortgage. They go to this pool of mortgage insurance to help cover their debts. Right? So for you, you're going to be paying this every single month, but you're never going to use it. Now, there is a way to get this removed. And the difference between the two is that 20% I was talking about earlier. So on one side, on your mortgage insurance, you can get that removed once you have 20% equity in the home by making a request to your lender. Now, if you have purchase mortgage insurance, PMI, that usually means you have an FHA loan. So if you have PMI, you actually have to refinance to get that PMI removed from your mortgage. But as long as you have 20%, it's 100% something that you can do. So then once you get that removed, your monthly payments are actually going to decrease. So if we go back over all of our items, we have our principal, our interest, our homeowner's insurance, our taxes, our mortgage insurance, and all of that gets bundled up to be your monthly payments. And like we talked about, there's a couple of those things that you can remove. So what's the takeaway? When calculating your budget, make sure to take all of these items into account. This will give you a clearer picture on your monthly expenses and help you avoid surprises. Thank you so much for watching. And if you enjoyed this video, like, follow, and subscribe for more real estate tips from your favorite realtor.